Okay. Welcome to today's webinar. We are going to get started in about 30 seconds or so. We're going to give individuals time to jump in, and we're about to put a poll question up. So it would be greatly appreciated if you could spend a minute or so answering our poll question. It's going to be very simple. What do you hope to get out of today's event? And then I will kick it off. All right. It appears that we have quite a few people that are joining, so I'm going to launch our poll. Please take a minute or so to figure it out or to figure it out. I apologize for that. To answer the question, on behalf of the entire team at Environment+Energy Leader, thank you for joining us today. Today's session is going to break down a clear and practical framework for modernizing infrastructure without upfront capital, with Redaptive and Nuveen walking us through how infrastructure monetization works in real operational settings. You are in for a treat, a real high-level discussion today. Before I hand today's event over to Madeline, I do want to go over a few housekeeping items with all attendees. This event, as all of our events, is going to be recorded, so no need to take notes. Feel free to come back and watch this event on demand. We do appreciate any and all questions that come in from our attendees. We will do our very best to get to the questions before our 60 minutes is up. But if we don't get a chance to answer your question before the end of today's webinar, a member of the team will follow up with you as soon as possible. You can see the little Q&A widget at the bottom of your screen. That is where you will submit questions for our presenters today. You also have the option to chat with different attendees. Please feel free to let us know where you are joining from. We'd love to see the global audience that we have on with us. So enough from me, because I know you all are here to listen to a fantastic event today, and I hope you enjoy. At this point, Madeline, I'm going to turn the presentation over to you.
Great. Thanks so much, Jessica. So as Jessica mentioned, in this session, we're going to explore how a new model can drive progress toward modernization with limited capital and complex internal approvals. I'm going to hand it over to Dawn and then Arvin for quick introductions, and then we'll hop into the content.
Great. Thanks, Maddie. My name's Dimitrievich, and thanks to the folks on this call for joining, and look forward to the discussion with Arvin. I'm the portfolio manager for Nuveen's energy infrastructure credit business, and we've now invested over almost $3 billion in high quality teams like Redaptive to help them build their businesses. In terms of the broader Nuveen platform, the infrastructure business manages close to $40 billion, and Nuveen on the whole manages close to $1.4 trillion. Look forward to the discussion.
Thanks. Arvin?
Thanks. My name is Arvin Vohra. I'm the CEO of Redaptive, co-founded the business in mid-2014. Prior to that, was at a commercial lighting controls company named Enlighted, where we came up with the concept of lighting as a service. And then prior to that, I was in investment banking and energy structured finance at Lehman Brothers and Barclays. Thank you for attending today, and looking forward to sharing more about what we're up to here.
Thanks, Arvin. Okay, let's hop right on in. So we're going to talk about the investor and market view first. So, Dawn, Nuveen recently announced a global infrastructure investment platform to meet unprecedented investor demand for infrastructure exposure, underscoring market confidence in long-term infrastructure returns. So, Dawn, Nuveen's expansion into multi-asset infrastructure, it signals a strong conviction in this space. What's driving that momentum?
Sure. It is actually one of these moments where you see the confluence of a number of events that really create what we believe is a historic opportunity to invest in the infrastructure space. So, I mean, I think if you take a step back, some of the drivers that require capital are obviously, you can't read yes, a headline today without some reference to artificial intelligence and the need for compute processing capabilities. That all requires a tremendous amount of energy. And the analogy folks use is a chat GPT search takes 10 times as much power as a Google search. And when you start to extrapolate, when companies use AI for their businesses and what that means in terms of the broader economy. One, it presents economic growth for the macro environment, but from an infrastructure investing standpoint, that's going to require tremendous amounts of capital in the order of hundreds of billions just to build the data centers and the power capacity to support those. So that's one driver for the need for infrastructure capital, and in debt is typically 60 to 80% of the capital structures. The second driver that's resulting in this opportunity is really the recognition that we're seeing here in North America and in Europe that you can no longer rely on China and Asia for some of the critical infrastructure equipment that we rely on. And so there's this push towards the onshoring of manufacturing, the reindustrialization of manufacturing. That's going to require a lot of capital. And the example we give is there's one semiconductor facility that's planned for upstate New York. When it comes online here, the amount of power it'll requires equivalent to the power consumption of the states of New Hampshire and Vermont combined. One facility. And there's approximately 180 projects in the US under development in excess of $1 billion of capital. And so you can start thinking through how much power demand will be required by those facilities and how much capital is required. And then the third trend is just the electrification of industry. And obviously, Arvin's going to speak a lot to that. There's a tremendous just secular drive and push on that front. And so those three trends, AI, the onshoring of the infrastructure supply chains, and electrification generally, that require hundreds of billions of capital need. And what we found from an investment perspective is that infrastructure debt is a critical source of that capital. And in a market where we have macro concerns around inflation, recessionary risks, labor considerations, infrastructure as an asset class can be quite defensive. So a lot of the investors that are attracted to our strategy, like the growing addressable market and complemented by the defensive nature of infra debt.
Yeah. Thanks, Don, for that context. Just pulling on that thread a little bit more, how do you see private credit and structured equity playing a role in the acceleration of energy transition and reindustrialization?
Yeah. I mean, I think part of it is a lot of the investment opportunities that we're seeing require flexible, bespoke capital solutions. And one of the things we focus on is really trying to tailor a capital solution for our clients or our borrowers' needs. And as companies like Redaptive really look to expand their franchise, they're looking for a partner on the capital solution side that can provide that flexible, bespoke capital, because it's not a one size solution fits everyone. I think you've got to, from the financial capital provider standpoint, think through what is the capital need of our clients? How can it be structured in a way that's accretive to their growth and business objectives, and at the same time, obviously, meeting our return requirements. So that creative matching of the borrower's capital needs with our return requirements is the part of the secret sauce, if you will, in terms of why our capital can be particularly attractive for our clients.
And even a little bit more specifically, how does a model like Redaptive's align with the kind of investments that Nuveen is making?
Yeah. I mean, we've obviously made a significant investor um, alongside some of our LPs to the tune of close to 650 million that we provided Redaptive. And the rationale behind that, obviously we have a strong conviction in Arvin and the management's team's ability to execute on their business objectives. Two, we like the secular trends that are playing out in the businesses that Redaptive focuses on. Coming back to some of the questions or some of the comments I made earlier, we know energy demand is growing because of AI, because of the reshoring of manufacturing, because of electrification. So you've got this growing energy demand that's driving capital investment. At the same time, what we've seen in terms of uh, incremental generation capacity, you're seeing delays in permitting. You're seeing some supply chain issues as it relates to natural gas power generation. So as we look to sources of energy supply, it's become more challenged because of the permitting, the permitting challenges. As folks on this discussion may know, the average utility scale project takes close to 5 years now in terms of inception to actual operations, which is, an incredible amount of time that you need to wait to see that new supply come on. Same with nat gas turbines. I mean, you're hard pressed to find availability, until the late 2020s, right? So 2029, 20 and 2030. So new supply is challenged. And this is where the Redaptive model really starts to come to fruition. It crystallizes because their focus on reducing energy consumption or demand through the various initiatives really actually allows us to manage that energy demand growth without having to deal with the energy supply delays. And so they can actually satisfy their clients' demand, which is really making sure that they have the energy that they require in an efficient, cost-effective way. So there are a lot of macro tailwinds that are supporting Redaptive's business. Their proven ability to execute is another reason why we were attracted to working with them in this partnership. And then the third sort of piece to this is we're seeing just, for inflationary pressures, labor cost issues, permitting, challenges, power prices, both at on the wholesale side as well as on the retail side, are continuing to escalate. And so the proposition that Redaptive can provide their customers, which is not only do we provide your energy solution, but we can actually save you operating expenses along the way, is something that resonated with us as an investment team, because you're providing a needed service and support function to the end user, and at the same time you're saving them operating expenses. So the business model itself makes a lot of sense. And then we had to work with Redaptive in terms of crafting a capital solution that satisfies their requirements for the projects that they're executing on.
Thanks so much, Don. Arvin, let's hop over to you for a second. How are capital providers and solution providers reshaping this landscape from your perspective?
I I would actually say it's not even reshaping the landscape; it's creating the landscape from scratch. There's a symbiotic dependency that companies like Redaptive have on solutions providers that are providing private capital solutions. Um, and there's this interesting part where you've scaled up an offering up to a certain point of commercialization, but you're still pre-capital markets. And that's what Nuveen and Don and his team are really kind of, filling that gap. And so there's a symbiotic dependency that capital providers and are working with these solutions providers like Redactive. Um, And so that programmatic approach that we're providing our clients, while it's in this state of I'll call it like pre-capital markets, um, you know, that meeting of the capital and the solutions provider is absolutely essential, to deliver, more holistic solutions for our customers. And so I would say it's not just reshaping the landscape. There's as Don identified, there's hundreds of billions of dollars of issues on infrastructure, and efficiency in buildings is just one of them. But outside of the kind of the broader landscape of what's happening, to our grid today, there's no choice but to have a symbiotic relationship between capital and solution providers, to create this new landscape, to redefine infrastructure in its new era. So that's my look into it. It's I think a lot of folks are calling it an infrastructure evolution. And I can appreciate that infrastructure finance and project finance has been around for a long time. But I look at this as just as it's a 2.0 of that, because the magnitude is significantly greater than it's ever been before.
Yeah. Yeah, so that's the interesting thing, Arvin. I mean, one of the things, Nuveen's been doing infrastructure investing. In fact, going back 125 years ago when Nuveen was first formed, it was in relation to investing in a water infrastructure company with municipal debt, right? So at its core, Nuveen's been involved in the space for the last 125 years. The project finance market's been around for the better part of 50 years. But that market, which is incredibly attractive and serves a useful purpose, you've got to have certain criteria, or you've got to check sort of check the box on a couple different elements to qualify for that type of project finance capital solution. Companies like Redaptive and what Arvin is building need more flexible capital in the form of debt that has an appropriate cost of capital associated with it to allow Arvin to execute on their projects, to generate the right returns, and to make the value proposition attractive for their clients. And so we work with the Redaptive team to craft a credit solution or a series of credit solutions, which is what we've done, that can effectively be utilized for projects at different stages of development with different risk profiles and different costs of capital, that then allow them to both make an attractive economic return, but also making it economic in incentivizing their customers in terms of pursuing those relationships with Redaptive. So it's an iterative process. The project finance market has been around for a long time, but as Redaptive develops new products, new business models in this environment, finding the right credit solution to go along with it is a critical part.
Absolutely.
Yeah, thanks to you both. You both have touched on some of the market challenges, so let's transition over into talking a bit more about that. Many organizations are sitting on outdated infrastructure, and that's draining capital and efficiency, yet their upgrades are stalled by CapEx constraints or slowed by fragmented one-off execution. So, Arvin, if you could take this one first, what's holding organizations back from modernizing at scale?
I mean, corporate inertia is a real thing. There's a traditional mindset that exists, and I think it's pervasive not only in corporations, but also just the way we operate at home. Which is, if it's not broken, don't fix it. Like, that's what we've been trained to do. Like, as like all of us when we're children, or like, if it's not broken, don't fix it. But now what happens is what happens if you have something that's inefficient that's running just fine? Right, and it's consuming 30-40% more energy than what it could consume with brand new technology. And so one is that cultural, the mindset shift of thinking about the fact that you can proactively do something that is economic. there's a complexity of execution. The United States has, more than 4,000 electrical mechanical contractors, just in the U.S. Right? So fragmented procurement, fragmented execution, that also stalls a lot of progress in deploying, electrical and mechanical modernization at scale. Um, the energy supply constraints that Don was mentioning, they'll continue to intensify. Rates will go up, and I believe that kind of reactive maintenance, that won't be a viable strategy. At some point, you're going to think about these things proactively, because the steepening of the power rates is going to be larger than it's ever been before. And so there's the need for this proactive model. Not to advertise about Redaptive, but the short plug is like, we're upgrading these assets to generate cash flow. Reduces carbon. It's OpEx positive. It's CapEx positive, and mitigates risk. So that's what we're looking at. So how do you solve these problems? But the fundamental, the problem is, it's a lot more than capital. Capital, absolutely, there's budgetary constraints. Everyone knows about the budgetary constraints. And when I started Redaptive, I actually naively thought if I solved the budget constraints, then I would have a scaling business. But it was far deeper than that, right? It's how do you know we're actually saving money? So where's the data to show me that you're saving me money? How are you going to execute this and get this done? In addition to shifting the cultural mindset from, hey, if it isn't broken, don't fix it, into let's proactively remove inefficient assets out of your building and do something about it.
Yeah, great. Thank you so much. Don, anything you'd like to add there?
No, I mean, I think Arvin summarized it well. From our perspective, we're obviously, as investors, we're looking at the entire opportunity set to try and think through both where we think the best risk-adjusted returns are, but where the opportunity is headed. And I think in this environment where we've got this significant energy demand growth. And while no one has a crystal ball, you see projections all over the place, but it's pretty clear that energy demand or power demand is growing at a rate that we haven't seen since the advent of air conditioning back 50 plus years ago. And so you've got this huge energy demand growth driver. At the same time, you've got power prices that are increasing at levels that we haven't seen in the last 2 decades. And so you've got the convergence of those two. So when we think about where are there opportunities that make sense to invest, the areas that that Redaptive focuses on in terms of building out some of the energy efficient technologies or helping their clients execute on ways that make them more economic, more productive, more efficient, and holistic solutions around that. To us, that makes a lot of sense. And in a environment where regulatory changes are shifting pretty quickly between administrations, and you don't really know where the regulatory environment's ultimately gonna go. Thinking through just on a fundamental level, what drives an opportunity, both in terms of the energy side and the saving side, to us that just makes sense, and is frankly shielded from some of the regulatory uncertainty and geopolitical uncertainty that we're living in.
I think, and Madeline, if I can just add, just
Sure.
one of the things here is like this, Don, you and I have talked about this before. There's this emerging sector between services and infrastructure, right? Is Redaptive a services company, energy as a service, or are we an infrastructure company, which is infrastructure monetization? And a little bit of preview into our rebranding, but you know I think once folks are like, once investors are educated, and I think Don went through this process, it's like, oh, we have hard assets, contracted outcomes, performance guarantees, UCC filings, recourse to customers. This is truly infrastructure. It belongs in that category. Sometimes there's some there's a pony in there as well, with regards to the way organizations look at this is you can get a bunch of services providers to provide you real estate maintenance services and things like that. But is the Adaptive solution alongside those services providers, or truly an infrastructure solution?
And, and I would comment on that because that's one of the biggest things that we often, or at least misunderstandings that I think some folks that have done infrastructure for a long time, the question we get is this truly infrastructure to Arvin's point, or is it infrastructure adjacent? And I would argue, or is it just a services business? I would argue, and we've obviously invested because we do have a strong conviction in that, that this is an infrastructure asset. And companies like Redaptive are very much on the vanguard of where infrastructure is headed because you do have hard collateral, you do have contracted cash flow. The corporate or the end client or customer of Redaptives is in a position where they're able to reduce their operating expenses, focus on their core business while allowing companies like Redaptive to focus on the infrastructure, part of their business. It is additive to Redaptive's customers. From our standpoint, this is an asset class that is defensive, provides you with those certain cash flows, typically, or in many cases, has some inflation indexing associated with it. And it's economic without any types of regulatory incentives. And so the commercial underpinnings, the economic underpinnings make sense. So that's why we've been a very active investor in this asset class.
Thanks so much to both of you. You've done a very nice job framing us up for the core of this conversation, infrastructure monetization. Let's just hop right into it because I think everything you're talking about is going directly into this. So Arvin, let's get some clarity here. What is infrastructure monetization and how does it differ from traditional models like energy as a service?
Yeah, thank you. It's a good question, and obviously, as we went through the rebranding of Redaptive on shifting off of being an energy as a services company into an infrastructure monetization company. And the key differences are that the infrastructure monetization is taking all of it put together, right? Like the tailored capital, the turnkey execution, the data-driven outcomes that are the underpinnings of the billing, which the billings are ultimately what pays our investors back, like Nuveen, for the money they gave us to put the new infrastructure in place in the first place. So to drive that portfolio level kind of outcome, provide a guaranteed outcome for these customers across hundreds of sites, not just these one-off small projects. Our identity needed to move into us being an infrastructure provider, rather than a services provider. And that fundamentally is the biggest difference between I think energy as a service and what we're calling infrastructure monetization, is what are you providing to that customer, in terms of services versus infrastructure.
Yeah, let's take that just a step further. And I'd like for you to talk a little bit about how this approach helps to overcome the challenges of internal friction and how it helps to accelerate modernization at scale.
Well, the funding eliminates CapEx needs, right? And so that there's a bottlenecks that most Fortune 500 companies have, and I'm saying most nowadays because I have seen some tech companies that have just put blank checks behind things. But outside of the minority of companies that represents, there's a tremendous amount of folks that are, that have limited CapEx budgets. And so the financing provides a shift from that. A programmatic approach on, doing, things at scale across your electrical mechanical infrastructure is important as well, because that talks about what an enterprise's impact would be, rather than what's a site-by-site impact. And finally, the implementing these things programmatically at scale, that reduces more of an internal PMO load of like, I need to review every single project, I need to review all the details of every single project, and I need to now build this business case that I put into an annual budget, and now that I put this 300 site lighting upgrade into my annual budget, I can wait and I'll be able to roll this out in 2027 if I get that done in 2026, which is the traditional way these things happen. We're taking that risk off the table and saying, well, look, if you have a lighting upgrade or an HVAC upgrade that has a 4-year payback, 5-year payback, like, why would you wait a year to get that done? That doesn't make sense. And then finally, that's all underneath the premise of the core of Adaptive's identity, which is the measurement verification, our data platform, because that data is what measures the actual savings and the outcome that we're billing for, and that data creates the underpinning of a capital markets ready asset class for efficiency assets. So we've built that infrastructure in house of effectively getting measurement data, and proving that it's something that we can take out to the capital markets.
Don, what are your thoughts on this model?
Look, I think what Arvin said certainly resonates with us. I think to our view, we see the value proposition, and I keep coming back to the fact that we're in this environment where you've got the challenges of power demand growing, and so there's a need for either new supply or more efficient ways of consuming, the existing applications and for that energy demand. If you can create a business model that addresses a client issue, which is they're looking for ways to save money, especially as power prices continue to increase. You're providing for that customer a proven ability to execute on those savings, something that isn't their core competency. You've got the systems that are accurate to actually measure those efficiency gains that Redaptive's providing. And in doing that, you've basically addressed a customer need. Redaptive provides that customer with the CapEx solution through our financing. It actually makes sense on a commercial level. It addresses a customer need, and frankly, from a capital efficiency standpoint, if done properly, it's a win-win all around. And so for us, that's a pretty compelling business model. And I think, the fact that this asset class will continue to grow as people become more knowledgeable about it, creates an opportunity for us as we sit here today to be that capital provider. But at the same time, you'll see the evolution of this market with newer, more efficient, permanent sources of capital that'll ultimately refinance our investment. So we're focused on the business opportunity, making sure that we're getting compensated adequately for the risk that we're taking. And then we're always thinking about, well, what is our source of repayment or refinancing that takes us out down the road? And to our mind, you have this current environment that's constructive on all three aspects. So that's why we're very constructive and bullish for this asset class.
Thanks so much. This all sounds great. Arvin, can you please share a bit more reality here? Can you walk us through an example customer success story?
Yeah, absolutely. So this is a client, global plastics manufacturer, in manufacturing that we've worked with, done they 100 more than 100 projects across 16 sites, a mix of HVAC, lighting, controls, motors, delivered with consistency, in an expedient timeline. I mean, these things don't happen overnight, but much faster than they would have done on their own. Um, had a clear financial ROI. I think the numbers speak for themselves. $24 million of gross energy savings, maintenance savings. They had the emission reductions that they're looking for. It's even more important because they had internal carbon reduction targets that they've set, with their shareholder base. Um, with that, we designed this and rolled it out programmatically. So this is not only a cash flow positive, you know, the right thing to do from a TCO, the total cost of ownership standpoint, but also ultimately improves the resilience of their core business operations. And this is done across the U.S. and Europe. So what was our solution and role in this is, we provide the capital. We sourced and worked with finding the right electrical and mechanical contractors to get this job done. And then we provided our data platform that measures and verifies the upgrade and provides the underpinning for the billing that we provide to our customer. And so that's I think this is one of our core customers, and obviously it's been a phenomenal success for both sides.
Yeah, so you talked a little bit about resilience, business resilience there. This is to either one of you. How have you seen customers reframing infrastructure as a strategic asset that is driving that business resilience?
Happy to take it
Arvin,
first.
do
I
you
mean,
want to?
yeah,
Yeah, why don't
like
you take it first?
yeah, like so we have we're very fortunate to have CBRE as an investor in Redaptive, and the amount of time that there's emergency calls because you know a hurricane hit a facility, or this has happened or that's happened, and things have broke, and now the hospital can't perform elective surgery, and they've lost $8 million of revenue. Um, it's a much bigger percentage of people's jobs, on the real estate management side than you may think. And so, reframing from this is a maintenance expense, into this is what I need to actually perform and defend my business and then grow my business. Um, it's something that it's coming, it's happening. People are starting to see it. A lot of times, yeah, I think in the past, across the electrical mechanical industry, a lot of our business cases were like, based on these Excel-based ROI calculators, and the mechanical ones always ended up being really difficult because, like, well, why not put some duct tape on this air handling unit and just make it work for a little bit longer? Um, and the part of the business case that I would think a lot of people eliminate was like, oh well, I don't like this risk of surgery revenue being lost. Like, I don't want that's not a part of the ROI. Let's take that out. That's not the ROI of me upgrading this mechanical system. But what's happening is, I think, enough of us in corporate America, and like I said, the corporate world, across the globe, have touched the hot stove enough that we now know it burns. And you're starting to see that show up quite a bit from, looking at, maintenance expense on one side into strategic infrastructure that protects my business and increases its resilience. And you're seeing us transition from one to the other.
So Arvin, you're giving some great examples there from a healthcare customer. On the screen here, we've got a manufacturing customer. So Don, from an investor standpoint, what types of companies or sectors do you believe benefit the most from these kinds of partnerships?
Well, I mean, Arvin hit the nail on the head in terms of the nice thing that we like about this is it spans almost any industry. And at a time where I keep coming back to some of the fundamentals, right? We've got data centers, obviously huge consumers of power, in some cases as large as cities. You're going to see that there's potential issues with grid stability and all those types of knock-on effects that come from the amount of energy demand growth that we're seeing. The grids at the end of the day, were, in some cases are 50, 100 years old. They weren't necessarily designed to have the stability that's required for the load that we're potentially going to see in the next decade. So for companies that require critical power for their business or critical energy, companies like Redaptive are providing an ability for them to remain online and to satisfy their customers. That's critical, and we do like the diversification. I mean, Arvin touched on hospitals, touched on industrial companies, but this spans any business. And let's face it, most businesses are consuming more and more power, especially as we start to embed AI technologies and LLM type data computing into their businesses. Power is going to be critical, and so the both the capital need and the diversification of the end client is pretty significant. And those are just the commercial realities. Obviously, as folks think about decarbonizing the broader global economy, this has the added element of helping decarbonize things in a way that is commercial and economic. And that's one of the reasons why we do have such a strong conviction around this asset class. You satisfy the customer's need, it saves them money, and at the same time, it also reduces and decarbonizes the broader region.
Yeah, really appreciate that holistic view. That concludes our session here. We will hop over into Q&A, and I'm seeing several questions. So I'll just start here at the top. First one is for Dawn. Would Nuveen consider greenfield lending in the LNG sector?
We do. We take a pragmatic approach in terms of assessing opportunities. And so right now we do see a need for natural gas in terms of some of the global markets. And so that is an area that we're actively investing in and looking at.
Great, thank you. Next one is, what do you believe the role energy storage will play for resiliency integrated with microgrids and renewable generation?
It's huge. I think everyone knows that. I think the storage is one of the things that's just not a debate, right? Yeah, it's bipartisan. I think everyone's looking at storage and saying this is, something that's going to be critical. The question is, when is it going to become economic? And right now it's economic in some areas. But I'm such a huge fan of storage. I think storage and the price curves of batteries, if it follows anything like think about what a mainframe used to be versus now you have the computing power of an old mainframe times 10 in a cell phone. So if you see any type of kind of evolution on the cost curve that's similar to what we saw in computing on batteries, which I believe is going to be the case, I actually think storage is what will probably eliminate the need for demand response, because all of the demand response activities and the fact that solar only produces power when the sun shines, that's all going to disappear because storage is going to effectively balance the grid out. So I'm a huge fan of storage. If I wasn't doing Redaptive, I'd be looking at utility scale storage or something like that, in terms of what I'd be focused on.
Thanks, Arvin. And this next one is for you as well. What risks does the provider assume, and what risks remain with the customer in this model?
The primary risk the provider assumes is how many hours they're running their facility. And so if we do an efficiency electrical mechanical upgrade in the facility, and they say their facility is running 6,000 hours a year, and then all of a sudden it runs only 2,000 hours a year, when they were expecting it to be 6,000 hours a year, that's a risk that's very hard to underwrite for not only Redaptive but also any capital provider. So that's the primary risk that the providers use. The maintenance risk, whether the asset works, whether the asset provides the opportunity for energy savings, whether it gets implemented correctly, any cost overrun risk, rebates and incentive risks, those are all risks that we take on.
And I would add, I mean, just to address the point that Arvin raised from a capital investment perspective, one of the things we're always looking at is the projected energy efficiency gains or savings versus actual. So we're always trying to make sure that we understand what is the actual savings that are actually achieved versus some technical assessment of what those projected savings can be. And so that ultimately is part of the core diligence risk mitigation here, because the whole premise of this is, of course, that by making these capital investments in the infrastructure assets, that you'll achieve a certain level of savings. And from an investor perspective, ultimately those savings have to actually be achieved for the project to be economic and to make sure that our investment is ultimately repaid.
Speaking of the financial side of the house, the next one is kind of on the finance side. How are companies accounting for this model on their balance sheets?
Majority of companies are considering this off balance sheet because we own the infrastructure. And so think of this as providing reliable electrical mechanical infrastructure for these customers. And so that's the majority of the way companies look at the Redaptive solution.
And from our perspective, we're ultimately, to a certain extent, agnostic in terms of the GAAP accounting treatment versus on a cash basis. We're constantly thinking through what is the capital investment, what is the what are the revenues associated with that capital investment, and that's what then ties back to what are the actual savings that have been or unit of energy efficiency gains that have been achieved.
Yeah, thanks for that. Arvin, I'm going to give you a two-part question. First part is, what actually does Redaptive do or provide? And the second part of that is, how do you determine, sorry, the questions are moving around on me. How do you determine which assets or systems are the best fit for this model?
So what we provide at a high level is a capital solution in partnership with Nuveen, meaning we go to a customer, they don't need to put any of the money up front. We put up all the money for the brand new infrastructure. We provide a platform that sources and finds the right providers and the right technologies for that customer. And so I'll go back to that in a little bit to answer the second part of your question. And the third thing we have is a data platform across electrical, water, and gas that's able to measure and verify the outcome. And what I mean by that is, what does the precondition look like, and what does the post condition look like, and what's that continuous delta of savings that we're actually providing that customer. And so that data platform is how we measure the savings, and the way we get paid back for the infrastructure that we've put in place is through the savings that are being produced off of that brand new infrastructure. And so that's what Adaptive does. How to figure out the right solutions for any particular client? It's always done in collaboration with the client. And so, you have certain, we obviously are doing site surveys and traditional audits as a part of each of the projects that we're doing in a portfolio that we've, programmatically aligned on with the customer. So on a side-by-side basis, we're doing these audits. We have, surveys with the site managers as to, what they're looking for, what keeps them up at night, where the opportunities may be. And then based off of that information and our historical project information, we create an action plan of what to look for in those facilities. But as you can imagine, the upgrades are, mostly traditional electrical mechanical upgrades, right? Like lighting, VFDs, controls, motors, so on, solar, storage are things that we look at as well. EV charging is something that we have done and is a part of our identity. And so it's about building that plan, kind of like a master development plan with our customers that we can go and execute upon on a side-by-side basis. So that's how we figure out what exactly to do. But as everyone knows, every building is different, and as you get into a building, some buildings may need a different, customization of the plan of what we're looking for.
Great. This is for both of you. Are you, Nuveen and Redaptive, exclusively in the USA or also interested in global operations?
We're in the USA, Canada, Western Europe, and I think safe for me to say that Nuveen is our partner across all of the Redaptive projects globally.
Yeah, and I would just echo that. I mean, I think we see this as it makes economic commercial sense in a number of regions. Now we focus on OECD countries in terms of my strategy. North America, just given some of the macro trends and the energy demand growth is obviously a core market, but we're certainly working with Redaptive in regions like Western Europe, and this makes sense. I mean, in any country where power prices are relatively high or escalating, the value proposition that companies like Redaptive are providing make economic sense for their customers. And from our perspective, as a capital solutions provider to enable that, we're very supportive.
Great. This next one is about indexation. So this is somebody talking about the Nelson Construction Index. It says, what is your view on the best indexation for long-lasting heavy investment projects?
I mean, I know the Nelson Construction Index has something to do with oil and gas. Don, you have a viewpoint on this?
I mean, we don't necessarily look at any individual. I mean, we look at capital intensity and cost and ultimately ROIC, or return on invested capital, as the benchmarking. We don't specifically rely on one benchmark versus another. It's asset specific, and ultimately the capital investment for the project, given capital intensity, has to make the economic sense, and we'll factor in various types of cost factors. But as a benchmarking exercise, that's not something we do with a specific benchmark in mind.
Right. What percent of capital are you planning to spend on AI and automation to make your business processes more robust, powerful, to potentially address your increasing infrastructure needs and projected demand?
I'm assuming that question is for me.
I think so.
Yeah, and so but I think it's the core of what Adaptive does, and we've done this, prior to the AI boom, right? For the fourth year in a row. I mean, in 2026, our operating expenses are going to be about the same, and we've grown 45%. We've had a 45% CAGR during these 4 years. And so people are like, how are you doing that? Well, the reason we're doing that is because we're actually implementing automation and efficiency in the way we operate as Redaptive on a daily basis. And so, while we're selling efficiency solutions, programmatically to our customers, it would be kind of ironic if we weren't efficient ourselves. And so it comes into our culture and our DNA. So as a percentage of the capital that we're spending on AI and automation, I couldn't tell you exactly off the top of my head, but like I'd say it's probably like a good 20% of my team is thinking about this. Um, Simply because if the remaining 80% are, 2 times more productive, it leads to a compounded outcome in terms of the growth curve. And we've seen that now. Like I said, with having, next year being the fourth year in a row that we've kept OpEx relatively stable, while growing, 40 to 45% every single year.
All right, I'm going to hit one more question and then I'll hand it back over to Jessica to wrap us up here. This is going to be a kind of a four-part in one question for you, Arvin. How large is Redaptive? Are Redaptive's clients mostly private sector, public sector, or both? And who does the installation of the projects? I think you've answered a couple of those things in a few different areas, but maybe hit them one more time.
Yeah, so happy to share that. How large is Redaptive? It can be measured in a variety of ways. But I'd say, we're significant, all right? Like we're large enough that Nuveen would want to invest in Redaptive. What does that mean? We have more than 100 customers. Most of them are Fortune 500 customers. Deployed more than $1 billion of capital at this point, and are looking forward to deploying all of the $650 million that Don and his team have given us. Who does the installation? It's the electrical mechanical contractors, and we try to create a partnership with the entire industry, and become in a way that is very friendly to the rest of the industry. We're never trying to compete against the industry. We're trying to increase the size of the pie for the industry to execute on these opportunities. And so we're completely agnostic from both the technology and vendor standpoint, which, in inverse means we're working with everyone. And our clients are primarily private sector. And so we're focused on private sector clients, not the public sector.
Great. Thank you so much. Thank you, Don. Thank you, Arvin. I'm going to hand it back over to Jessica to wrap us up.
Yeah, what a fantastic discussion. And I apologize, we did not get a chance to hear or to have everyone's questions addressed. So again, the team at Redaptive and Nuveen will follow up with everybody who submitted a question and be in touch with those who have requested to be contacted. So on behalf of the entire team at E&E Leader, thank you for being a part of today's event. And if you are watching this on demand, please feel free to submit questions. There'll be a survey that comes up for live attendees as well as ones watching this on demand. And we will pass any and all information over to Redaptive and Nuveen. Have a wonderful day, everybody.
Thank you.
Thank you.
Thank you all.
Thanks.